Welcome to your Optimal Personal Economy podcast with Justin Bennett. Your personal economy is your ability to create, protect, preserve, and utilize your wealth, your financial world. Justin will share strategies and stories to help you optimize your personal economy. Now, on to the show with Justin Bennett and co-host Matt Halloran.
Hello, and welcome to another podcast with Justin Bennett. Today, Justin's going to talk a little bit about what it's like working with clients over a long period of time. Justin has a lot of clients who've been with him for many, many years, and he just had an interaction with a client that we thought was going to be a great podcast. So Justin, tell us a little bit about this client meeting.
Sure. Hey, Matt, how you doing?
I am doing very, very well. I am doing well. How about you? How are you doing?
Good. All is good. All is real good. So I thought it'd be good for our listeners to just kind of understand and hear what actually transpired. Because sometimes, we give examples of what we do or what we're capable of doing, and it's hard for people to really wrap their arms around because a lot of it is into the future. And so it was yesterday, got a phone call. Actually, client reached out to me asking me if I had any time to talk. I then got back to them. We scheduled a phone call same day. And the basis for his call or for his reach out was he wanted to point out and acknowledge that, it was about 11 or 12 years ago that we started working together. And at the time we started working together around his planning, we had initially set a whole bunch of things up that helped him, his family, and his business immediately right out of the gates. And then naturally there were things that were going to, help him 12 months out and 18 months out and 36 months out. So we put together a plan. We put together a track for him to run on. And, he liked everything. He understood everything. And naturally, he hired us to help him with his planning. And so we put a number of things together for him, some of which was around cash flow deployment and how he can structure his cash flow, specifically some of his income, with some structure, with some integrity, and with some discipline so that it's saved back onto his balance sheet in a manner in which it's done systematically, it's done automatically, and he knows that as it's going onto his balance sheet, he can then, prior to him hitting age 59 and a half, he would be able to turn around and utilize some of that money for things that might be important for him into the future. And so he wanted to talk yesterday about how to utilize some of that money that he had been placing onto his balance sheet for 11 or 12 years. We spent some time around what he was looking to do just from an objectives perspective. And he had pointed out to me that there was some property up in Vermont that he wanted to acquire, and he wanted to acquire it primarily for investment purposes, but he also thought his family would be able to get some use out of it. So, he came to me with the idea, he came to me with the desire, he came to me with, what he was looking to accomplish. And he was just asking me, how do we get the proper capital, the proper money from his balance sheet to use as the down payment so that it doesn't disrupt or interfere or encumber his planning. So we looked at all the resources available, and we wanted to make sure that he's not subject to taxation, subject to fees and penalties. We also wanted to make sure he doesn't lean on his short-term liquidity money so that he's going to always have the proper liquidity even after he bought the property. When looking at his entire balance sheet in a very macro view, he determined that he wanted to utilize the cash value that had built up inside of his life insurance. And he had thought back to when we had initially started working together, and he pointed out and he reminded me that, I just told him that there was going to be cash value inside his whole life policy that he can use for whatever he wants without restrictions. And so he said, hey, I remember us talking about it, but I don't really remember the mechanics of how to utilize it. So we were able to put together a solution whereby he can come up with the proper money for the down payment, and he could do it at an extremely low interest rate. I think it's going to be around 5%. So he's going to borrow the money at about 5%. And he's going to then use that as a down payment. and he anticipates, according to what he told me, that he's going to generate income from the property, and the income that he's expecting, based on what he outlined to me, is far greater than the interest rate on the loan. So he was not only going to be able to service the loan interest, but he's also going to be able to replenish the loan and put it back towards his policy, which he could then at some point in the future use again for whatever reason he may want to be able to use it for. So, and while all that is taking place, his cash value, or I should say the growth on the cash value, is going to continue to grow unencumbered as if he never took that money out of the cash value. So the dividends, the guaranteed interest are going to be credited on the gross or the full amount, not the net amount after he took the money out. And then, he could either put that money back in, like I said, to be able to reuse it again in the future, or if he didn't put the initial amount back and he just, serviced the interest portion of it, the outstanding balance at his life expectancy, which for him was about age 89 or 90, would then be subtracted from the life insurance proceeds that are paid out from the policy. So we thought it was a pretty cool way to have the option to either put the money back and then be able to use it again for another purpose, or not. And if he doesn't, he's still going to be able to know that well into the future, his family is not only going to receive the life insurance proceeds, they're going to have the capacity to eliminate that initial loan. And if he holds the property up in Vermont long enough, they're still going to have the property in Vermont, which at that point would have little to no mortgage.
You said something, Justin, that I love, which is he had the option, right? So that's what's so wonderful about the planning process, right? Is if it's done with that forethought, which is what you do, right? The projection of potential opportunities down in the long run, it really gives people these wonderful options, even if they either don't entirely remember them or don't realize the impact.
That's exactly right. I mean, and just to be clear, Matt, you point out options, or you mentioned that I pointed out options, and his other options were like a home equity line of credit, which he had a fair amount of equity in there, but he was concerned about that because the prevailing rate on that was looking like it may be higher than his utilization of the loan from the policy. But additionally, he didn't want to take equity out of the house because there's a commitment, there's an actual commitment to pay that back, a requirement, I should say, to pay that back, where he had no future ability to service just the interest and then have a future promise in the form of a life insurance to then pay that back. He could have utilized some of his non-retirement investment account, but the concern around that is there's a fairly large gain inside of the investment account, which would have then triggered a capital gain tax liability, and that would have been higher than his prevailing interest rate. And he could have borrowed money against his retirement account, but he didn't understand that if he borrowed the money and then he moved to a different company, the balance on that borrowed money would then be all picked up by him as income for that given calendar year, and he has to pay income taxes on it. So there was many options that he could have looked at and utilized, and just by virtue of having many different places to look at, he was able to come up with the most effective, most efficient use of the money, come up with a down payment, and then ultimately have a strategy going forward. So it was kind of neat because it was 11 or 12 years after we had initially started working together. We did the estate planning with him and his attorney, and property and casualty insurance and liquidity and structured cash flow savings. We saved money into investments and retirement accounts, and we had his entire comprehensive overall balance sheet in a very, very extremely balanced position, which gave him the ability to lean on a capital source that was very, very effective for what he was looking to accomplish when he came to me and told me what he was looking to accomplish. So it was a really neat experience.
Yeah. And again, whether if it's a great balance sheet or a great plan, having those in place do definitely give you options. Well, Justin, quick closing thoughts before we wrap up today's podcast.
I think the future is the future. And as much as we want to know exactly what's going to unfold for each of us, we don't know. As much as we want to know, we don't know. So having, that optionality and those abilities to zig and zag as life has planned and unplanned life events thrown your way is most critical. So definitely would make the strong suggestion that, at all times you're going to have many options to be able to utilize your money on your balance sheet.
Well, Justin, thank you very much for your thought leadership again today.
Thanks, Matt.
If you have not subscribed to the podcast, make sure you click that subscribe now button below and make sure that you share this podcast with your friends and family. For everybody at Bennett Financial, this is Matt Hallern, and we'll see you on the other side of the mic very soon. Justin Bennett is a registered representative of Park Avenues Securities, LLC, or PAS. OSJ 1150 Raritan Road, Suite 201, Cranford, New Jersey, 07016. Phone number 908-709-0020. Securities products are offered through PAS, member of FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America. New York, New York. PAS is an indirect wholly owned subsidiary of Guardian. Bennett Financial Group LLC is not an affiliate or a subsidiary of PAS or Guardian.